Welcome to the Breakfast Club. It's now the 24th of June, 2026. Welcome you all. Let's have a look at the market, see where we're up to today. We've got a lot of consolidation going on in here on the hourly level. Look at that. There's a little frustration for you. So from an hourly perspective, higher time frame perspective, 4 hour, same thing. Daily. Let's look at the daily here. We haven't run out any lows yet. Yesterday's big run down, so just work it out here. We might get one more little pop below here. And send that back up. Inside yesterday's candle. I like to see us just kind of roll over and take out this low this morning and see if we can't get a new low here and then send it higher. So what would we see on a 4 hour chart for that? Yeah. Not a lot to pick from here. You just got to wait for something clean, and there's nothing clean in here. So I'd have to wait for this to get broken on the downside and see a reversal on at least a 15-minute chart. Still not so. 200 handles to make up for the day. So let's put this to a 1. We can continue down for that low that we're looking for. So we still model 3 here. Not looking for model 4. Eternity here. Let's see if we can get it to come all the way back up here. Oops, oh my, stop. So. That's enough to trip it right there, to go lower. Good, Scott. Looks like we're pushing out one of our gap lows. Yeah, we've got lots of liquidity. We just tripped out the top there. Those equal highs at 867. We managed to get to 872. And then there's nothing really down here unless we're going to make a big dive down for the lows here. Or that next big down close wick is 731. Look at that. It literally came up, gave me a kiss on the nose, and left. See if we get a bigger run in here. $804. Well, you can't get that close 3 times in a row to tripping my trade in without tripping it in. It's literally half a handle. Half a handle to get me in. This should get it. You know what it was? This last down close candle, check this out. If I would have done the half the wick as my marker right there, that's 7975. 7975 right there. Look at that. That would have been the trigger. Just that half the handle was enough to keep me out being above that. 797 would have been the trigger. It's okay. I thought it would come to 804, or at least up into this little imbalance right here. We still might get it. If we don't, that's how I'll know why. I was just a little tad bit too high off that mean threshold of that thing. So now you've moved to break even on that. You want to see it leave here now. Not all this banging around. And you're in the 15-minute discount box now. There you go. So that's how precise it can be. I could have been in on that. I looked at that a little closer. I wanted to get the touch of the breaker again. So I was just underneath that, but didn't think about that. So one of the 6 levels I tell you for a Model 4 that it can come back to. And it to 1 and 2, 3, and then if there's a no-go zone above you, you got the 3 levels in that. Oh well, we can close that out now because that's already gone to where I want it to go. So we're already in this zone now. So again, we're looking for these lows to get taken, and you can start looking for, as soon as we close below here, then I'm looking for a retest. So this will be a Model 3 here on a 15-minute chart, targeting 698 to 713. So for this 1 minute, we're targeting down here. You got all these to target and this. Did anybody take that trade? Model 4? Coming back into this consolidation now. Yep, little scalp to start the day, 2 micros. Good for you. Are you risk free or did you just take out your trade? So we're back into this consider just cut because of trailing down, drawdown on a small account. Trailing drawdown. I don't get what's a trailing drawdown. You're taking a loss on that? Or you must be at like Apex where you could only do like $1,000, $2,000. That's your limit. If it goes down below that, then it closes your account, regardless of how much profit you got. Yeah, Apex rule. That's the retest of this. I like that perfectly. Right there. Now keep coming lower. We're targeting this area here now. Midnight open. Morning, Hans. So keep your eye on the midnight open, and then we want to see this area act as a no-go zone. Now that you've, I was just thinking about this from a logical, how would you trade your stop loss behind this? So you don't get that, follow that rule in Apex. If you're in short here, where you just drop below this level here, came back and just tapped it, that's one. Enter in there, drops below this low, move your stop loss to break even, comes back up into this bull trap inside the breaker still. You got to wait for it to break through the breaker. Breaks through the breaker. Now move your stop loss to above the high. Come back. We want to see this low and this breaker hold price now. And it literally came to half that wick. Got short. As soon as it takes out that low with a close, then you can move your stop loss to here. Wait for this hot low to get taken out because we're looking come back and retest this candle. It does. Takes out that low, so your stop would sit here. And we're targeting right here. There's a small little volume imbalance right there. So you don't want to see it break this out, come back, support itself inside this little block right here, and then start pushing higher again. Now that we've reached the discount box, because we just tagged it now. So your pay point 1, 2, and 3 inside here, or just 80% of your trade comes off here and you leave 20% on to run for the bigger box. So now what I want to see is this freeze down here, but close below this point here in the next 2 minutes. I want to see it close below here. So if you haven't paid yourself there, look for the setup that's occurring on the 15 minutes. So if I hold it here, just underneath that for 2 minutes, and then come back up into this area here, and then send it lower for the next 15 minutes to start targeting this, that would be my model 3 in the 15-minute chart. So you see how we've taken a model 4, if this is the small little range, or a model 2 if you're looking at the larger range. If you're just going box to box, so you're trying to take out this box here to this box here, then that's the larger range. That's a model 2. Model 2 continuation. You're just hunting all this internal range liquidity, low-hanging fruit inside here, inside that range. But I like to look at a range as something that contains a SIBI and a BISI. If you have a box-to-box trade, that's internal, so that would be a model 4 continuation. That little range there is done. You're coming back into this larger range now. There's nothing else in here except for down into here and here. Say 1 more minute. We want to see it close here. I don't want to see it take out these lows here just yet, though. So just hover around in here for the next minute. See, we haven't taken anything out here. We just came back up inside it. So rejection block, good place to turn around. 34 seconds. I got another bite on the retrace. Nice. So now what I want to see is 15 seconds. It's closing below this level. And we called this, when this candle was forming, we were calling this down here. So far so good. And it's right off the rejection block. So it's a great place for this now. We've closed below here. Now I want to see it come back up. There you go. You're in there now. Now is where I'd like to see a nice little reversal off of that. And there you go. Move to risk-free, and we want to target down here now. Thing is, we can still come back up and just, that would be enough to take me out there. See how it came back into this zone, this no-go zone, right to the top of it perfectly, and then rejected off of it. So I don't want to see it come back in there again. Otherwise we have to settle for 65 bucks. The trade's paid for itself. As soon as it takes out that low, you got to move to break even plus the cost of the trade. I just want to see it accelerate here now and start really driving down. Morning, Derek. How you doing, buddy? Hadi, good morning. Doing good this morning, Hadi. How are you doing, buddy? I'll take another run there. This time I'll put my stop loss right above that high. The problem is, and the reason I have to put it above here is it's the no-go zone, right? So we've already reached the top of it. So for me, I don't see any reason why we should come back up into that area. You can come back up and tag the midpoint and then come back and tag the low of it. I'm okay with that. But for me, there's no more reason to get back up into here. It's also the midpoint of this last down close candle, this last down close candle, and the no-go zone. So I want to see this get the hell out of Dodge. So we'll move this. As soon as it takes out that low, we'll move to break even again. I'm glad you guys are doing good, Hadi. I love hearing that everybody's okay out there. I tell you, when you get to 60 and higher, you start to appreciate your health. So all of you guys have got your youth on your side. I remember a guy telling me he was in his 40s, and I was just starting firefighting, and he was exercising, trying to keep up with us. And he's like, you guys don't realize how much your youth or is your health is important. You really don't, not until you feel the stress of not having it. Okay, so there's that. This is what I used to call buffering. So that you pay yourself there if you've only got one on board. Now I want to make sure that I am above the mean threshold of this little bull trap here. So we're finishing off this discount box here first. So you got to watch that this 1 minute right here is also this last up close candle's mean threshold. See, its midpoint right there is the low of that candle. It's also midnight there. So you have to make sure you pay yourself there. So I don't want to see it get through here now. But we can come back one more time out of just sheer punch in the neck is to come back up in here one more time and tag the 774. Is this analysis? I know it's helping, and Hadi and Derek and Hans have bought into they drank the Kool-Aid. They understand what I'm talking about. For the rest of you who are kind of sitting there on the sidelines not saying much, does this analysis of the market help you? Is it too detailed? Is it still witchcraft? Is it still guessing for you? Like, does it tick your boxes for, see how we just come back in? We haven't broke below here yet. I do like the first little probe through. We got 7 more minutes now. Oh yeah, I was talking about buffering, wasn't I? And buffering is like when you come into that zone, you get short on it. You start looking for a run lower. So it starts to run lower. As soon as it takes out a low, you move your stop loss to break even, or you'd pay yourself at the low. If you had more than one on, you'd take one off there. Comes back on, load it in again. If it takes out the low, pay yourself again. So you're kind of buffering in case it turns back against you and takes out your stop loss, which should be sitting up here. So you buffer any losses you would have taken out of here. That's why I used to call it buffering for some reason. Okay, so now we're traded through that level. We're coming back to it. We just give it a little kiss right here. Now I want to see that go lower. That's a Model 3 all the way up into here because this now becomes the no-go zone. So your stop should sit right above the high of the no-go zone. As soon as it takes out that low, Model 3 completed. Now, when they're that small, you may go, well, that's not really a big model, but that's making the assumption that that's always going to be a small little area like that. These can be huge. You can have a Model 3, it can pay you dozens of handles. There you go. There's Model 3 completed, right from where we just gave it to you, right off the midnight open, right inside the zone. And we're still targeting our 15-minute fair value gap down here. And remember, we are still see if that's open down there or not. It is. Lobo Cash. Short day. Well, that's $1,000. Not many people would make $1,000 at a regular job in a day, and we've done it in a matter of 15, not even 15, 1, 2, 3, 4, 5, 6, 7, 8 minutes. Right? And we're just going to target here, and you can say that'll be it. Your day is done. 8 minutes worth of work, and you go and have a nice little siesta for the rest of the day. So here's how you can do this. You can either go, there's 3 different models that we're typically trying to trade right there. You just hit it now. So you pay yourself $1,200 and move to the sidelines. So you can do this. Just stay on each candle now. See how the highs don't get broken? Stay on each candle or pay yourself at the midpoint of that level there. Either way, we walk away with $1,000. Now, some of you guys might go $1,000 is nothing. Good for you. There. Oh. There, that should take me out now. This spread, look at that. Actually overlapped my trade, but the spread kept me in. How's that for lucky? So midpoint right here at 698. We're looking for just a run on the downside today, Derek. And then I'd like to see us pull back into the range, or pull back into yesterday's range. We could still come down to 476. That would be the run I'd like to see fill. It's 476. So my take profit will be down here at 476 if we get down there. How's that for a long way down there, hey? I'll put it at 477. We'll be lucky. We'll hit for the lucky. Now what can happen is we can hit this midpoint here, or the consequent encroachment of this, and then get a nice revisit of that rate up here, and then send it lower again. So watch that midpoint now. If I had 3 on here or 4 on here, I'd take one off right there. Pay yourself one there. That's box to box on a 15-minute chart. We traded below it. We traded back into it. If you're doing a box to box or a no-go zone, see how the no-go zone and the box to box overlap? So you got a box, 2 box, done. See that midpoint? See the reaction we're getting off of it already? Now if I move my stop loss down into that that candle there, we'd be out of that. So this is the kind of thing I want to see us see if we pump right back up into here, or if we just snap and just drop straight through here now. I want to see it. If this is going to go, it's got to rip through here and break this downside. And if you're unloading your position here at that level, how do you get back in? The same way we did right here. As soon as that discount box gets broken to the downside and we come back and retest it, we're looking for continuation. As soon as this discount box gets broken to the downside, we come back, retest it. We're looking for a run on the rejection block and low, low, rejection block, low. Does that make sense? But there's always sensitivity. Like greater than 80% of the time, you'll see 70 or 70%. Greater than 80% of the time, you're going to see a bounce off of here, some sort. So where would be a typical place do you see it bounce back to? Here. Or just a small little fair value gap that occurs in here. Like you want to see that small candle form, hold, and then the next candle give you an institutional order flow entry drill for a run lower. And that order flow can run right up into that candle. So that should take us out here. If we're looking at a retest of this, that stop loss should be taken out. So that's why you pay yourself right there at that midpoint. There, done. There's $1,000 in your pocket. Small little imbalance right there. You got to keep your eyes on these as well. See how that small one there? And this one here, change in direction right after hitting a key level we're looking for. Watch for these as well. I know it's a lot to look for, but you train your eye, you'll get it. I didn't know what any of this stuff was when I first started. So now I'm looking for this to make a small candle, and then the next candle after 12 minutes, I want to see it just come back up, tag this or this here, and send it lower. Now if this runs all the way up into here and tags that, then we're looking at the high of 752. So take this small little range here and see what we get for this. %. Where does 50% of this small little run here? Where does that get us? Draw it across. Do. Right. Look at this candle right here. When I put my 50% in there, 739 comes back and tags our candle right here. So that's what I'm kind of looking for, is a run back into here. Just get above that 50%, which is a retest of that candle there. And then see if we can get a nice, then you look for a reversal in here. We've got a higher time frame we're looking at. We're looking for a higher time frame, and then we're looking for a lower time frame to confirm that the higher time frame objective we're looking for is going to give us our reversal. I hope you understand why I tell you make sure you pay yourself at that midpoint. Midpoint, always important. There you go. There's the touch. The low of that candle is 34 and 37. So we've tagged it. %, should push us right into here. And then looking for the high. And so now you just say, okay, great. We paid ourselves down here. We got our stop loss tight enough to confirm that if that's a sensitive point, that's a place it can come back to. So maximize your profit. And then you want to say, what if this gets ripping all the way through here? What if I'm completely wrong and it does not go any lower than this and just keeps ripping higher? Okay, well, then just wait for your opportunity to see the long form. So we want to see this bull trap break to the upside, come back, find support at it, and send it higher. Remember the high we said was 752, 753. So you can see why if you held your stop loss on that, it's just eating up all your profits right now. So if you just manage that with each candle going down, we were right there and it didn't take us out. So here, there, literally came back and took you out there. So if you just manage it from each one of the previous highs, you would have got closed out right there, which was the bot. You would have been real close to the midpoint there. Okay, so there's the 53. Perfect. There's 53. Perfect. And look at the reaction we're getting off of that. That's the highest we wanted it to go, and there's where you get. So now you just wait for a, man, we're nailing it with precision today. I love it. I love it. So that's the max. Now I want to see us get a nice little reaction off of here. I want to see this level get taken on a close. There's a small little imbalance right there. See it? Just come back and give that a little tippy tappy. Not happening. So wait for this one. Now if this closes here in 30 seconds, look for this one all the way up to here. There, done. So we still need this one here. Didn't get it. So we'll look at this one here. Then just if we don't get that, then look for this last little fella down here. That's the box to box run. So now I'd be looking for this right here, for this body to break through here on a close. Then I'd look for all of this to retest it. There. We can still come back in here though. Open's coming. Was that precision or what? Now look for the rest of your 15-minute close. And then we'll look first to come back in here at lunch or for the open. Let's wait for the open to see what we get here. It's got to break through. It's got to close through here in 5 minutes. Look at that snap back, hey? We did not close through that level. We just wicked all, cleaned out the bottom, and now we're running all the way back up to the top. Box, done. So that was a quick run on liquidity. Still inside this box here in a 15-minute. And right back up. And now we've taken out. No, we're sitting right at 53 again. That's the top of this candle here. That box, the BISI, you don't want to see it break through the box of the BISI. We've already ran back into our no-go zone on the 15-minute. So if we run through the 15-minute no-go, we're looking for a run into this little imbalance up here, and then run for those equal highs again. We're changing direction altogether. So this is where you got to stay on the horse. We wanted to see it run lower, but you got to be prepared to change your mind. You got to be prepared to stay on the horse and observe where price is changing up on you. If you don't, and you marry it a direction, and you're like, this stuff doesn't work, because you're ignoring these turn points, and they can turn like in a matter of a minute or two, they can turn on you. So if you're not watching and understand these points clearly, you're going to get slapped around, and you're going to say it doesn't work, but it does. So 5 minute, I want to see this. We can wick up through here into this, and then I want to see it go lower. If you're looking at a 5-minute chart, you want to see a model 4 continuation, or a model 3, I should say. This low, you want to see low getting taken out. See how we traded below this no-go zone, and we have not come back to it. not come back to it, then whip. We come right back to it, and then drop down and take out this low. That's a Model 3. Boom. And from there, on a 5-minute, is 790 all the way to 734. So you take that out, that's 57 handles in 2 minutes. That's a lot of handles. Now you got to change in direction, right? You only want to see a retest of this. Once this low gets taken out, you want to see a retest of this. I don't want to see it come all the way back up here again, because then this is a change in direction. Now that we swept out some lows, we're in a higher time frame SIBI. So watch, if this is going to start pumping higher, we want it, you don't want to see that close above here, or you do if you want to see it go higher. Otherwise, this just retesting this is fine. Just keep bringing it lower now. That's all good. That's all good. It's got to keep coming lower though. You don't want to see it revisiting that one more time now. Now that we've had this low taken out, come all the way back into the breaker. Is that a breaker? Yeah. The breaker, and then send it lower. I'm going to wait 2 more minutes because we could just get some serious chopping around here, or we could get the big dive down we're looking for. Again, we're looking for a pump through here and then a retest of this. So I'm going to see it go blast through, come back up, retest, and then send it lower. 629 is your, oh, boo, blast through. There you go. Rejection blocks right there, 620 or 666. And then your next one is at 639. There you go, fellow travelers. So now that's a huge run through here already. Would have been nice to see it just stop here, come back, tag it. Now we've got the extension has already happened. Now I want to see it freeze up in here somewhere. Before the big dive down, it might run right through here first, take it out. So then what we're looking for, if we don't get this low or an opportunity to get the range extension here on a 15-minute, and it takes out our rejection block on the hourly is sitting at 628. So look for a lower time frame. Do we get an access to this on the lower time frame, 686? So just come up in here. There's the bottom of it here. Again, don't use this as an idea to retest this level. If you're on the 15-minute, you have to stay in the 15-minute for that. This, we want to see it just come back up and tag this low, or come back and fill this its no-go zone is right here. 686. So that was as high as we needed it to come back to 686. We'll try and sell one short there. And then the stop loss has to go just above here. Now here's the trouble. If we blast right through here, see how we just ran out the liquidity there and sent it higher? That's not what you want to see, which is exactly what it's going to do here. Change in direction. That's what you get when you play around near 930. These huge wicking candles. So that just took our profit that we made here. So run now. You look at the hourly chart right here. Look at that, right in the rejection block. Tagged it and sent it right back higher. So now I'm looking for these highs again now. See how we've cleared this all out here? That's all looking for a run on the highs now. Should have anticipated that. Should have anticipated that. Too close to 9 o'clock or 9:30. Okay, so let's get back here. Get on the horse. So because we're consolidating in here on an hourly, this could run up here, take this out, and come all the way back into this zone again here now. So if 9's made the low, you want to see 10 and 11, 12. So the next couple of hours, you want to see this go higher. But because we're bouncing around here on an hourly chart, like you see how your hourly chart's just going back and forth and back and forth. We've swept this out on a 9 now. So 10 should take out the highs. And 10, 11, 12 should go up into this no-go zone here on the hourly. Would be kind of cool. There's a retest of these whole highs here. That's a buy area. We can come all the way back into here. We can come all the way back into here. All the way into here, here. All this area is. This is going to be solid though. We want to really start pushing higher. This should hold. I'm going to go break even in case this comes back against me here, because I'd like to see that hold, but we've got a big open here and we've got this nice little bull trap that we've already cleared. Yeah, I think we can come back into here. This would be like an institutional order flow entry drill on a 3-minute candle or a 5-minute candle. You want to see it come back and just tag this old high here. This hasn't, that, they all haven't been hit. So it has a tendency to like come right near this premium area here. So this would be your premium box. That's the premium. And then bounce around and come back to the areas that it never validated. You didn't get the trip in here, didn't get one here, didn't get one here, didn't get one here, didn't get one here. Now see how we're coming back to it? That would be like the institutional order flow entry drill. So if you're looking at 50% a run back into this small little leg we just made here, that'll put us back into this area that now that one's got tripped. These ones are all tripping now. If we lose half of that, then we're coming into this and this. I do like that for a long here. Let's see if we can get back to the midnight open. Where's our 8:30? Where's it? He's 8:30 here. I think I'll stay at NQ 739. It's just today's call it D, heading for lows. Violence so far. We have an SMT. What a tease it was. Yeah, this is starting to get choppy now, right? Right in this area here. There's your midnight open. Send it up from here, or come back down into this, right down in here and here. I do like the idea of it coming all the way back down to this guy. First candle to the left. Look for a revisit of that. If we continue going lower, we're going to look for this to break on the downside, get back into it, and then continue going lower. And get back in sync with this, heading for those lows we were looking for earlier. So to answer your question, Derek, I'm not sure this is going to go lower until we start breaking that no-go zone. I just want to see it come back and give this a little kiss here. You're way past your 50% already now. There's the retest right there. There's the midpoint right there. Now you want to see it leave from there. Sit straight up. Nope. Look for this retest. Right there. Good. Now I'm back into the idea of going lower. Wait 23 seconds. This whole breaker here, I want to see that get supported, and we can come all the way back into half of it. Or this one right here, 50% of that. Watch in the next 6 seconds. Yeah, I don't understand the 8:30 this morning, Hadi. It traded through it, through it again. There, see how we just dropped below it? I missed it. I'm too busy looking at 8:30. Look at that. Came back, tagged it perfectly. Now we're looking for that's a Model 3 right there. Done. 90 to 35. So there's 55 handles right there. Done. That's what we were looking for. Up here, we said we'd be looking lower if we took that, and I didn't get a chance to get in on it. Too busy looking at 8:30. But that's the retest. Called it before I did it, so you don't think it's all called after the fact. Now you want to see it tag that. Now it's late to the game, but I'd like to see that go lower now. Now I have to put my stop loss back above here. So there's 1, 2, 3, and 4, 5, 6. I want to see that keep coming lower now and take out the rest of those lows. Half the wick. So I'm sitting on top of half that wick now. Now I want to go to break even. But I think it's going to come, it can come back and take me out there. That half that wick is, see, we're so low in that thing, and I caught that so late. That's why I snugged it in tight. You don't want to, I don't want to see it come all the way back up in here again. See, we've already broke half that mean threshold again. So now I'm back inside this range here. So I'll look for a retest up here a little deeper into that no-go zone now. And we've set the lows, another low there from haven't set up a new low from the 23rd yet. We got to get through 580. So there's your first SIBI after taking out this low. My little marker here should flag that. It does. This is my new AI. It kind of talks you through each one of those ones. This is the SIBI in hand. Already through here. I don't have any of these no-go zones added to my indicator yet. Now I want to see if we can come back in here. See how we're breaking through that no-go zone? So now you're back to, we've come down, we've taken out the high at midnight or the low in Asia session there. Well, I guess it's 2,300 hours. Yeah, the Asia session low has now been taken. We did not take a... No, we have not taken out the Asia session low because that's at 1900 yesterday. See how we have not closed above it yet? We've got a wicks above. We're inside that candle again. That are the first little bull trap candle. So what I want to see here now is if we close above here, use this candle again as support, come up higher. And that no-go zone is going to be your watch. See how we open and close right on it? Tell me that's not an important data point right there. Could have closed anywhere else inside there, but nope, right at that data point. Just ran right up into this next one here. I went for a massage yesterday. Massage therapist says you got to get up and walk around more. You can't be sitting all the time. She's right. It's not 8:30D. I wasn't on 8:30. Sorry, Hadid. Was I on the wrong one, buddy? Oh, 8:30's up here. I was looking at Hadid's 8:30 from yesterday. Nice little premium array though, hey? Yeah, 8:30 hasn't even been tagged yet. Yeah, once it dropped below it, we did get a chance to come back to it, but holy smokes. She just left right at 8:30, hey? There we go. Now the lows are taken. Look at that, right there. Not going any higher. Froze up. Away she comes. That's why you got to wait for those candles to finish, right? Make your decision at the close of the candle and not when the wick's forming. And they did not break the no-go zone with a body. So there is that damage that the wicks can do. That's good. So now we were looking for, what was our last downside reach? It was like 480, right? 480. Let's draw that in here. I got it. This table does go up, but it'll tear all my cables out of my 480. Oops. Come back into that box some more. See how it's just ripping back and forth? If you want tight stop losses, it's going to shred you up, man. But that's swept the lows now. That's made a new little low here in our hourly cluster. If you look at that, see how it's taking out the lows here now? ES on its hourly chart. ES is not taking out its lows. Wow, it's really kind of hanging in here. It's taking out its highs. It's totally opposite to NQ's lows. Now I want to see if it starts to run higher. Start catching up to ES now. Look for your 830 now, Hadid. We can get back above 830, find some support at that, then you can start running higher. Because the lows have been swept now. That's a retest right here. That's a buy. That's a buy. I want to see this level right here. Get through midnight open, find support at midnight open, run for the rest of the busy, and then we'll look for a new run higher, new Model 3. We did last night. Yeah. What? Okay. Have a good day. That was the top right there. I'm going to close that out. So that was the high. That was the 1,000 right there. So that takes back the 1,000 I lost down there. So we're back up $1,000. So now I'm going to wait for Model 3 here. So that's internal range liquidity hunting. Okay. It's been a good show today. I've been calling some serious precision this morning, which is awesome. And it's on a 1 minute chart, so you know it's not all guesswork. Yeah, you got some equal highs above you here. But we got to break out of here. Otherwise, we can come back and retest all the way back into here. That's why you pay yourself, man. Pay yourself. See, we'd be underwater again now. So you're up 1,000 because you got to trade, grab your low-hanging fruit, as Michael would call it. Watching for this midpoint here. And I want to see it react off of there and start going higher. If we lose the midpoint of this candle again, there's nothing else in here. Oh yeah, there is. There's one right down here at 662 to 671. And if we lose that, then we're looking for another little run lower. Midpoint of this candle here, 662 or 622. There's the bottom of this one. We've got a small one right here. Midpoint here, you want to see that hold. You don't want to see the body break through this. So it's back to the no-go zone again. You break through that on the downside, then I'm looking for this no-go zone to act as support to push to the next one, which is down here. It's a small little guy. See you later, hon. Have a great day. Okay. Oh. I've got my new brushes. Some new paintbrushes. Cool. Let's see how they work out. Hit the like B, please. Yes, please do. If you hit the like button, it's all helps us out. Look at the body still respecting our no-go zone. Tell me that's not important, hey? Look at that. Those are interesting and cool little data points. If you know what you're looking for, that's the level of precision you want. Wicks, yeah, they do a bit of damage. Look where this one came down to. Doop, right into the next data point, consequent encroachment of that no-go zone. Look at that. All the way tap. Still stayed in that one. I'm going to come down and give that one a little kiss. Either send it higher or lower, man. You're in the middle of the range, so don't mess with it. Wait. Otherwise, you're guessing. Wait till you get something clear. Like look for Model 3 for an extension, Model 4 for an extension. This isn't even a reversal that you can get in on yet. So you've got to come back and retest this old no-go zone up here and then send it back through this discount one here. So box to box. And you've got nothing in here yet. So now see how we've traded below that level? We came back into it right there. Hit the next no-go zone right there. Small little pop. So now if it closes back above this, you're in the middle of this range. That's why you're not messing with this. You see how look at the wicks are doing some damage here? It's choppy, so wait for something clean. There's always something that sets up. Always something setting up. Just watch it. Take your time. This is the time when you start putting these no-go zones in there and marking them. I'm watching them. See how we traded through this BISI here? That BISI, we didn't get a retest on it. This one here, we finally closed through it right there. You come back inside it. Now we're looking for a lower. We're through our discount box. So literally that one there was premium discount inside this small little tight area. Now we're through the discount zone. Now I want to see that go lower from here. And you're looking at this target here, midpoint. And I have to be above this no-go zone here. Because this can run all the way back up to that area. Remember, we haven't got any validation on yet. So for me, we'd have to run through 2 no-go zones. So I'm looking at those as support plus this little bull trap here just to run me for another $1,000 down here. Since it takes out that low, I'll move to break even. Doesn't cost me anything. Am I in the, I gotta make sure I got the 50%. I was just eyeballing that. Yeah, I'm right on the money. Okay, so it came back and took me out. $29. Was that right there? 50%? Did I miss that? No. 50% is 20. We're still inside there. Give it another run. I still think we're coming there. Get that out of the way. It's going to come back and tag me. I'm sitting right on that bottom of the opening range, so we can come back and tag that open range and then go lower. Just give it a little clip first, and then I figure shit. Okay, you're going to come back and tag that. Now it's going to come lower. Nope. If you run up into here and then roll over, that midpoint hasn't been hit yet. Let's see what this closes. Still inside it. Come on down. And we're above the consequent encroachment of it now. Watch this area here. So I'm thinking if you didn't have that run down here, look for that area up there. See if we come up and finally validate it here. Lambo, how you doing, buddy? Watch for a retest of this area here. Now, if we get this candle down here, if we took both these candles, if I added both of them together, like Michael talks about, there's 50% there. I like the last candle as my, we're just shy of the 50%. And we haven't retapped this yet. We've got to swing, look for a reveal, look for a retest if there's no go zone now. And I want to see this hold and start setting it back up higher. If we eat back through it again, you can see how this chopping should come higher. Again, don't play in this zone. Don't chase this. Don't think you're going to nickel and dime this to death here. Even though I'm giving you some pretty skookum precision. Look at that, right back in there. Beautiful retest. Send it up. Look for this here to here. Look at the resistance in that area. Just says nope. Still no bodies back through here yet. You see that? So now we've got a battle going back and forth between this one and this one. These little no-go zones. Wait for it. This mean threshold, we're inside the midnight open range right now. And the first presentation fair value gap at midnight right here. Thursday, that's the first one. This way I mark these on my chart. You can see how there's some resistance in that first presentation, midnight. We've got no-go zones overlapping now. See how this one's held back. This one gave up. Then it tried to drive through again. Couldn't do it. We gave it up. Now we're looking for this to come lower again now. Look for that 50% of the range here, or the 50% of this candle again, which was that 620 area. So you see how it's chopping back and forth? And this is the weakest one of the pair inside that arm. Unicorn. I don't understand people's unicorns. I understand a unicorn as one thing. Michael mentioned it once. That's the only way I understand a unicorn. But a lot of people have their own unicorns, so man, I love it. Way to go, Lambo. You've got a unicorn that works for you, buddy. Oh, I see what you're saying. Yeah. Nice. I got you. I got you, Lambo. You're waiting for this whole consolidation to break. I'd like to see us take out the highs and then slam it for the unicorn there. That's a lot of consolidation for sure. I want to see those highs get taken out for that. Yes, I agree with you, Lambo. I see it. I'm thinking on the 10 o'clock candle will be green. Oh, the 10 o'clock candle will be green, he says. I'd like to see these take out these lows here first, Derek, and then send it higher. But you're right. This could be just straight up. We're right in the middle of that 9 o'clock candle now, so it could go either way. But if this is going to pump through here and then send that up, or whether or not 10 o'clock is going to make the new high, then you're back inside this hourly range of shite again. This is just chopping. This isn't even worth trading here right now. See how this one is constantly battling to try and push it through here? And this no-go zone is holding. The wicks keep doing some damage, trying to get up there. And then it's just a big tennis match. Bang. Drive it through. Bang. Drive it through. It just keeps driving it. This is obviously the weaker one of the two. So you still can't say, well, that one's finally going to give up the ghost. Because this could be one. This could get its support off this breaker right here. Takes out this high. This mean threshold. Gets a snap off of that and then drives it up. Now ES, what do we got? Do we have a similar thing happening here? Nope. First candle to the left, comes back inside it, rips through it, comes back inside it. I want to see this hold right here. If you want that to go higher, Derek, I want to see this point right here hold. That mean threshold of that candle is down here somewhere. So let me clone that one as well, so you get both of those. Sorry, buddy. I want to see this take out this low first and create a 10 o'clock low here and then send it up. I want 10 to take out 9. Yeah, I want to see this give way now. Below it, above it, below. We've got the 9 o'clock candle is set the low here in NASDAQ though. It just hasn't done it in NQ or ES, I should say. Shite it is. I use the MOR and standard deviations. I don't like it ranging inside. The MOR and standard deviations. What's your standard deviations like? Are you looking for something like this? That's one standard deviation to here. 2 standard deviations is down here. 2.5. This is the sweet spot that Derek and I like. I always like a good 2 to 2.5 deviation. So what's more, Kevin or Scott? Remind me what more is, MOR. Midnight open range. Okay, I got you. Whatever the 30-minute midnight open range is. Okay. Okay, so you take your deviations from here. You go from here to here, and you say, give me 1 standard deviation, 2.5. Got you. But when do you use it? Michael uses that 1 point or that standard deviation like early after midnight, right? You can see that deviation occur. Like that occurs way back here. And usually you'll see it if it's going to run up. You can take 1 standard deviation from here. 1 to 2.5 standard deviations from here. There's 2. 2.5 doesn't quite get hit though. So there's 2 standard deviations to here. That's when I think he uses the standard deviations. I didn't know he kept it through the whole day though. See how that one held? This one got pounded on. Oops. Finally gave up the ghost. Hit it one more time. Drove through our midpoint here. Now you want to see it come back to that 20 right there. Now go lower. Take out these lows now. In the absence of a no-go zone, I use this last down close candles mean threshold as the line in the sand to go lower. So it's like the no-go zone or the no-go line. You want to see that hit that and go lower. You don't want to see it come back through that. You're in the rejection block now, right? Michael taught us last year, I think. Oh yeah, he's taught that a long time ago, but he I don't remember him using that as an all day standard deviation. It works in London and New York AM. Okay, perfect. So you use it right from 9:30? What's your time for that, Scott? Low definitely seems to come easier than higher. Highs seem to be taken by wicks, but the bodies seem to be taking lows. Yeah. So that mean threshold's holding. I'd have my stop loss sitting there just at break even right now, just because I don't want to see it revisit that. And each candle now you want to see holding its high holds. And we're into the squabblers right now, the 16, 17, 18, 19 candles. So they always tend to go back and forth against each other. Check out my time and price, time in a bottle video. You'll see what I mean by that. 16, 17 can battle for a high or a low. 18 turns against 17 and 19 usually turns against 18. Then you're looking for 20, 21. 21, you're expecting 21 to give you your high or a low. So I want to see this push down now. Good. So now I put my stop loss right there. So you're in profit for sure. Pay yourself at the low. And that's the other one I just gave you right here, the midpoint. And then you'd move your stop loss to right there. There's a small little imbalance, so you could come all the way back up to that. But I want to see this get tagged now. Remember, you got 1, 2, 3, 4 instead of 6 now because I don't have a no-go zone in there, which is way back here. And that's already been worked, so I don't want to see that. And we've got a bull trap in here already. Still looking for that 7-7 zone right there, or 81. This will finally finish off that 4-hour civvy below us. And then we got some crazy stuff that's going to happen. If we take that out on a close on a 4-hour, then we've got some fun happening. Then we see some mighty drops in the market. See how if you're trailing your stop loss behind you, you would have made a little bit of profit there. You would have paid yourself at the low. Move your stop loss to the second or the last candle here, and now you'd be out. But you would have had profit. Otherwise, if your stop loss is sitting up here, you're underwater and getting worked. You've already broken the bull trap to the upside. We've swept the lows. That's all it needs to do now. It's made a new low. It's cleared out the whole hourly consolidation down here now. So now you've got open and the 10 o'clock, like we said, we wanted to see it take out the lows. It's done it now. Now you want to see it go higher and start running back through that range again and clear out those highs above you. Let's see if we can get a little tag on here. Darren, look at the 2021 turn time in a bottle. Yes. Exactly what we were looking for. A 21 turn. There's your 2021. Boom. Nice little turn candle. I'll give me a 27. This is what we want to see is the 27, 30, 32. This Crazy Ivan back into here would be nice, and tag me in or all the way down into here. So Crazy Ivan into here. I don't want to see this rip too high too fast here. So Crazy Ivan back into here, or Crazy Ivan into these two. Depends how fast it all goes here. So you're looking for that 27, 30, 32 all the way back into a nice little drop. That 27 to 38 level, right? That Crazy Ivan moments. I love the way Hans follows my time in a bottle. You start to see how clear it is now, hey Hans? See how that 9-10 turn? This is why we're looking for the 9-10 turn here. 9 made a nice little run. Now I want 10 to make it that low. And now 10 o'clock, that 10 o'clock hour, now that it's made a new low, typically should make a run up until 12 o'clock now. So we should take out these highs. 9 o'clock's made its run lower. Now I want to see it come back up and take out those highs. But I want to see us get an opportunity to get that long. So we'll wait for 27, 28, 27 to 32 and see if we can catch a run here. I just watch reaction on the levels and target along with 830 and return to midnight open range as a target. 4.5 standard deviations is indicated for reversal usually. If that works for you, Scott, stick with it, man. If that's your trade model, stick with it. So now we've traded above this candle's high and we're using it as support. No, still hasn't tagged it yet. So you wait for this one or this one, those two right there. Those two buried all inside. And if it's not clean enough and I can't get back into here for that Crazy Ivan time, I'm watching right here. This high no-go zone and the top of the midnight open range and the midnight open. If I can get back above that and come back into this area or tag these equal highs, then I'm looking for a run here. Watch for 27. I want to see 27 come back into here. 27, 30, 32. Here's 27. We're back into that candle, so that's ideally where you'd want to go. You may not get me here. I still want to come back here though. But that's the entry. If you follow the rules, it's as soon as we get a body close above that, that's the one you want to see it tag. You do not want to see the midpoint get closed below. Oh, that is through there. No, it's right on it. So you want to see that hold now and go higher. Oops. That's the rule. I'm just going to wait for this bottom of the hour. Crazy Ivan, see where that brings us here. That's the run right now. And so far, if you get above the high, you pay yourself. So your rejection block, pay yourself. You've moved to break even right now, and you'd wait for this level right here. Pay yourself there, and then wait for your next entry. That's low-hanging fruit in here. From there to there. Yeah, it totally is different. It's one thing we'll agree on, Scott, is that it is algorithmic. As soon as it tags that there, you pay yourself from here to here. And then you wait for another Model 3 to continue on, because if it just chops back in here, you would have paid yourself inside that internal range liquidity. There's 27. So now you're looking for 30, 32 up here to give me a nice little run back. Highs taken now. Remember this area didn't get validated, or got validated but just did not get retested. So that and that did not get retested. This is a nice little institutional order flow entry drill. Michael talks about these a lot, where you get the fair value gap forming, comes back and just tags it like this and sends it higher. Michael would have been in right there. I wanted that. Didn't quite get it. That's why he is the master. That'd be nice to see that. Just clear out these little highs here, run all the way back down here, and then run all the way back up again. So here's our 30-32 candle. See, now we have not broken this high with a body yet, so this one is not valid. Wait for it. Done. Pay yourself. Pay yourself. We can come up to here. Nice work, bro. Done. Right there. Right on a 30 candle. Now come on down. If that runs through here and does a 32 and takes out this high, then a retest right here, that should start going higher. That technically is a buy right here. As soon as it comes back into this no-go zone right here and tags that, that is a right there. That's a buy. I'm going to put a buy there just for the shits and giggles. I'm going to put a buy there. Now I want to see a 32 keep going higher here. Forget this crazy Ivan right now. As soon as it takes out that, hits that rejection block, I'm going to go to break even. Right there. Now just come back and tag the midnight open. Oh, it's going to tag me out there. I have to put it right on there. And then send it higher. That's a 32. Look at that. I'm just sitting there right there. I'm demanding that that give me my precision hold. Look at that. Now keep going higher. Thank you very much, sir. Appreciate it. There's a rejection block. Pay yourself. There's a 32 candle. It's a time to pay yourself, because that's the time for a turn. A crazy Ivan right there. Let's do it. Let's pay ourselves. What the hell? Now let's just wait for a Model 3. This is a Model 3 right here to take out that high. But we're at the rejection block, and this is right at a time where I expect a crazy Ivan to happen, so that's why I'm out at the rejection block. $400. I want to explain the narratives to you while I'm doing it, so it's not all just I'm just jumping in and jumping out, just sort of guesswork. See that crazy Ivan time? Now come all the way back, rip through here. Now let's come back and revisit this fella down here. You got 8 minutes to do it. We're coming back into that area again. So this is like a buffering. You would pay, you go long again there. But because it's the bottom of the hour, it makes me kind of skittish. So if we come back and retest right down into here, I'll be all right with that too. And then start heading higher. That's good. Be nice to see it retest that low, these highs right here. If we take out that high, forget the crazy Ivan. Seven four seven two. There's the, oh, that's what we wanted, Derek. Take out the lows. Look at that. You don't get anything here that did not close above that level, so you wait. The next one's here. We have a body close above it here. You come back, you tag it there. That's the only entry I can see here running for the premium array. You hit the premium, move yourself to the sidelines. You want to see this hold. Now you've got a body above here. You want to see that level right there hold and send it higher. If this closes below here, then look for another run back into more Chopsville here. I want to see that keep pushing higher, buddy. I hope you got long on that after the sweep. I hope you got a nice little long there, my friend. And there we go. See how that's holding? That no-go zone. You went through it, came back, found support at it. Body's respecting it. Look at that freaking close of that candle right on there. Send it up. Next one now, 830. Take Hadid's 830 here and use it as support. Wait for a body to get above that. This whole area now becomes a no-go zone for me. Let me get rid of these little guys. Remove this. I'll keep those in there because they're still inside that range. This one here, I'll extend this one to here. That's the one you want to see break to the upside. And then you can use this whole thing. That's unfortunately like 100, literally 100 handles of no-go zone that they can retrace back into to go higher. So this would be like the next price leg higher. So what you want to see here now is if this continues to close above, it's got to get above here. Now these are not super accurate ways of doing this. Yeah, it's hard to call really. I'd want to see this drop below here, create a nice little swing in here, then come back up and use it as support. So you look for wherever that high low is there. Let's, for example, take the midpoint of this or the low of it. That would put us right back into this no-go zone here if this is the next price leg higher. That's been hit, so we're hit the top of it here now. D is your models. You're referring to the CAM models. If you want a CAM model, this would be a cam model right here. You got a model 1, 2, and a 3 here as a potential setup. So cam model 1 is a return to here, which we haven't had yet. So cam model 1, cam model 2 is 50% of that. From there to there. Is 574. Okay, and a cam model 3 is this leg here, 50% of that leg. So 674. So that's right at the top of the next no-go zone here. That's a cam 2. And a cam 3 would be 224. You don't want to see it close below 224. If it closes below that, then look for another run lower. There's your cam model 1 right there. 1, 2, and 3. I'll put lines in here so you can see them. Now you can get wicks through here. That's fine. Remember, this area never got hit yet. And that area didn't get hit yet. So as long as the body doesn't close below 624, I'm looking at cam model 1, 2, 3. So there's cam model 1. You want to see it blast out of here now. If that's the case, then right there is where we're looking for a run. Did I get the low and the high? Yes. That will be it. So you'd be looking for a run up here. Cam 1. Does that make sense, Lambo? So right now, if that's your model 1, you want to see your stop loss sit right there, because that's what you're committing to as your cam model 1, right? So you want to see it leave from here, move yourself to break even, because you don't want to see that come back against you. Because if it does come to a cam 2, it'll take you out. So at least move into here and cover the trade. If it's wrong, then it's not a cam model 1 you're waiting for. Wait for the cam model 2, hit that, and as soon as it breaks away from it, put your stop loss at the bottom of it as your break even, because that's the one you want to commit to, because that's your setup. You don't have to have it your stop loss sitting way down here. See, that comes back and takes you out now. Then your cam model 1's not the play just yet, because we've got a body that's traded below here, traded back into that. You expect to see that come lower. But if you want your cam 1 to hold, it's got to hold there, and see how it's taking this little swing point. We've had a body trade below it. You trade back inside that candle again, and now we're going lower. So forget your cam 1. Now look at cam 2. Look at this range here. Look at 50% of this range. It's just a rinse and repeat. I know it seems kind of like changing my mind a lot, because the market, when it changes, you got to be prepared to catch the change. So cam 2 down here. And if you look at your 50% of this leg here, 50% puts you back at 658. So that puts us a body below the, we don't want to see a body get below the cam 2 model. You can see it wick into the 658. That's fine. As long as the body doesn't break that, send it higher. That will now put our new leg higher. So if we're looking to reverse engineer this and say we're just going to target this no-go zone here, this run down into here, or that cam 1 model, if I go to the bottom of this, or the midpoint of that, that there is that cam 1 model, or sorry, cam 2 model, and it brings us right to the consequent encroachment of that next no-go zone. Does that make sense? It's kind of like reverse. And you trust me, you do not use this as a method of guaranteed price trading. We're just trying to reverse engineer a possible run up there using something that is not 100% accurate, but a nice little price leg. We talked about having a nice little retracement back into here, and that would be a target we'd be aiming for. So now let's see how precisely we can engineer those spots and see what would be a downside objective to hit if it were to hold. So remember, your cam 1 is either the high all the way to the bodies. That whole rejection block area there is your cam 1 model. Ideally, tap it and go, but anywhere inside there, cam 2 is to the body, the midpoint of the consolidation, which is that spot there. And cam 3 is 50% of this leg that takes out the consolidation and then runs above it. So you're still in a cam 1 here. Right on a 42 candle. Filled this busy. And now we're going back higher. So now I can take that leg. Now that we've broken the high here, look for this to break on the upside as your leg continues. So we got a body above. That's a buy right there. Right there. Body broke that highest up close candle. Tag it, go higher. Now we broke this upper, we want to see this close above that whole no-go zone. And then again, we could come all the way back inside it. So you got to give it some room to grow. You're very welcome, Lambo. You're very welcome. Are you nailing it over there, Derek? Mr. B Hunter? Yes, buddy. Now, tag that. Take your run like this, Derek, and do the same thing with this one. Take that and do this. And then do this. That's your objective. Meanwhile, back at the ranch, we are in profit again. 74.91. Oh, Derek, 74.90, buddy. I'm a little more conservative. I know you're trying to juice all the honey out of that beehive for the 91, but I think I'll settle for the 90. Are you guys getting this? Do you understand? Is it explained clear enough that you can get the logic behind the narratives that I keep trying to call out for you here? So this was a Model 3. Model 4, sorry, continuation. Pay yourself at that high there. I've only got one on now. This is going to be one of those institutional order flow entry drills. I have to sit here because this can be one of those little pop down institutional order flow entry drill for a continuation to the upside. And that candle right there. It's mean threshold. I don't want to see it come all the way back through here. So look, you're looking at $1,200. You could come down to $190 and take me out. So as soon as we get, ideally you guys want to see a fair value gap form above the high, not at or below it. See how it's formed at or below it? That's good. Run like a mofo. Now I'm going to sit right there. I don't care if it comes back and takes me out. Put $800 in the bank. There's the 6 a.m. candle. Let's just see if we can run all the way to that new high. Derek, are you? Look for an institutional order flow entry drill. That's going to come back and get me. I'll take my $1,000. I'll wait. Come back into 50% of this. There's the institutional order flow entry drill. Look for 50% of this. You want to see a portion of this stay open. If this starts to trade through it, you've got a run above a high, you've got a BISI, and then as soon as the body breaks below here, that validates this for a continuation, for a change in direction, and I'd ignore this. These are nice to put out there, but you got to be prepared to say, I could be wrong, and that's where I could be wrong. If I lose this guy here, 50% of that, and that closes below there, I'm on the wrong side of it. So I just want to see it come back and tag that and send it up. If it as soon as it breaks that rejection block, I'll move to, actually screw it. I like that right there. So now we're going to go to cost of the trade. We're demanding that that price stay there now and keep going higher. So next price leg here, right at 50% of this leg, right? That's like, this would be like 50, 75, and 100. So we're saying that right there. So if let's just take 50% of this leg here. See if this works. See if that is 75% of that run. There's 50% right there. Right? Now you want to see that push through for the next 50%. They're not always 100% accurate. Okay, so it's not, clearly hasn't worked for me there. So now I'm looking for 50% here. Come back and fill this whole thing in here. Now, typically what you want to see, there's a reason why I say you want to see this occur above that level, is because you want to see a big candle up here creating a big fair value gap, and this would make 50% of the fair value gap that you see created above that level. Now, because it didn't create it above, you couldn't use the 50% unless we're looking for this guy right here. So right now we're still tagging that. It's got to go higher, and it's not got me on it now. So DC's trades are swarming. No pullback, no entry. Pleasure to watch you work. Thanks for sharing. It's my pleasure, Scott. Glad I can help out. If it helps your trading, I try to talk you through the narrative and why I demand those specific data points. Now, that may not be your trading style at all, but just try to look for the validity in what it is I'm trying to point out. And we're on a 1 minute chart, so you'll know if I'm full of crap or not real quick. And we've been on for 3 years now, so we're doing all right. Honey is cold. I need to come back to 74.76. 74.76. See, now your 50% is working. Oh no, you're 50%. You even blew through your 50%. You didn't even come back to it. 74. What did you say? 74.76. Yeah, that would have been 50% area of your leg. Would have been nice. See how we had our little run above here, right there. Boop. Come back, give it a little kiss, send it up from there. Come on, Derek. Let's get your 74.90. Oh, sorry, 74.91. I like that. 8:30, retest 8:30. Stop loss is going to go down here. I don't want to see it come back here again. This is the chop. I have to be below here. That candle. Bottom of the wick. Take profit's going to be up here. Watch right there at 18 or 821, or sorry, 812. Bounce off there. Send it up. Ooh, not good. I don't even like seeing wicks get through there. We're looking for lower now, boys. See how the body literally closed on that? Tagged it, sent it lower. So there's the reversal. We wanted to see that mean threshold hold, and look at that. Interesting data point. Hey, see how that mean threshold lines up with the close of that BISI, and they open and close on the exact spot, and then give it a little pop into here and send it lower, which takes me out there. I like that 830. I wanted to see that hold. Should have left my stop loss sitting there, but that's okay. We'll wait. Now you got to wait for this bull trap to let go, for that to continue. Otherwise, this is reversal inside this. We've definitely got a low going here, so you got to go low there, and I'm going to go up to the 830 again. If I lose that, that's it. I'm done. Because now she just keeps switching up on me now. We've run out the highs. We run out the lows. So a retest of this swing point here. And then send it lower. Mark, how you doing? I haven't forgotten your Mark III, Mark. I just have not spent any time in the last probably 4 or 5 months now playing with it. I've just been working on my as you can see, I'm set or version 17.3. So there's dozens and dozens of versions that are that I'm using for this thing. So still working on mine. I'll still get to yours. Oh, damn it. That's going to take me out now. Right at that 830. It's got me. Get back in sync with it, Darren. Get back in sync. So we'll just wait now, and I'm waiting for this to go. And then you got this SIBI here, which was what my bot should tell me is active. SIBI's in hand. It's active now. That's good. No body above it yet, so look for a retest in here. Right on the edge of it, right there. I didn't take it. I was looking for a little deeper run here. Look for that high now. Good morning. I just got back home. Good morning, Shepard. How you feeling, buddy? How's the neck doing? How you feeling, my man? Did we hit it? Oh, yeah. There you go, Derek. Sweep the lows, run it up. Got you some sweet honey there, Derek. Good man. Good work, buddy. Well done. I couldn't get in, so I got in the NQ and wrote it up. Oh, okay. Excellent. Doing a little better. Oh, glad to hear it, man. Glad to hear it. What did the surgeon say about the surgery? Did it turn out the way they had hoped? Retest. Send it up. I get caught on these when you see this change in direction here like this, and it's coming back into this range. I keep forgetting these old highs, that it can just come back and tag that. So to try and get in short after tagging this, you got to be like, okay, I'm in the middle of this range here. Do I really want to start confirming that I'm going to go lower until I take out that midpoint? And I get caught on this a lot of times. I still got to watch this. This is just a retracement back into these old highs here. Tag them and then send it up straight through here. You get one little tag from here to here. If I draw that little box out, you'll see it right there. There's a small little imbalance. If I stretch this out, you'll see it sitting right there. You have to include that. So you include that right there. Oops. Right there. See how the body trades above it, comes back into it, tags it, sends it up. It's tight, but it's the rule. Now I want to see if this reaches back into this candle right here. I'll take that for a long, right off that, and then I have to put my stop loss. Unfortunately, it's got to be down here. Takes out that high, I'll move to break even, but we can get another little run back right into this area that we want to see, that last little piece. And even though we included this, see now we got this change in direction here. Midpoint of this would be 829. $829 is right here. Lose the midpoint. Again, we're coming back in here. And it's 11 o'clock too. Oosh. I got to get out of here. That's 11 o'clock. We may not get that. We may not get that. I'll put that up there as a potential run-to point. I got to get out of there. 11 o'clock macro, start going lower. There's the perfect tag right there. Now it should start coming lower. That's why I got out. This could be a run all the way through into here and then start running all the way back down lower again. $39 is your 38 is your no-go line. Your LITs line in the sand is right there. It's got to go back up through here and then continue on reaching for our upside objective. How's ES doing? Look at that. See, changing direction right here. Just give it a little pop. Come lower. Targeting here, box to box. So right there is your entry. Below, come back here, targeting here. So you got your entry. Exits right there. Stop loss is sitting right there above it now. Look at 50% of this. If you're using take profit model 1, you're looking at 50%. Pay yourself there. Move to break even. Look for 62% after that. These are good and exciting things, Darren. Yeah, baby. It's been like crazy accurate this morning. I've taken some stupid moves, stupid plays, but you know, hopefully you forgive my stupidity at points. And if you follow the rules, and again, they're just my rules, but they're very rigid. And when I don't follow my own rules, I get my ass handed to me, and I get myself into trouble if I don't follow the rules. So the rule is 11 o'clock. You see the change in direction. It traded below it, trades back into it. That's why I got out of my long there. And then there's the perfect point right there for a short. Because if you're wrong, it'll trade above, come back to it, find support at it, and leave. So you get your trade off there. So the perfect entry for a short is here. And if you're wrong, it turns into a long. You can get your trade off before it goes higher. So that's your short. Here's your discount box right here. Box to box. You pay yourself. 1, 2, 3. Boom, done. That's box to box trading, my friends. And how's our ES doing? 50%. Did you pay yourself 50%? Did you move your stop loss to break even now? Now you're looking for 62%. And then this box down here. As soon as it gets to 62, move your stop loss to 50, take off 10% of your trade right here. We're using take profit model 1. This is a retest of this area. You do not want to see it trade through this and close above here because we've hit 50% already, right? So your entry in here for your short is now at break even plus the cost of the trade. You've taken half your trade off here and the rest of it's in profit. So there you go, 62%. Now you move to 50% right there. You've just jumped into big profit there and you've just nailed 62 and you're hitting right on the edge of our dot, our line right here. You pay yourself. If you're doing model 1 only, or sorry, model 2 is box to box. Pay yourself right there. There's 75%. So now you move from 62 to 70, 75, you pay yourself again, and now you're out at 70%. So you got the full run, internal range liquidity, all the low-hanging fruit. Now, if it turns and goes back higher, you'll be glad you paid yourself at 75%. If it closes below here, look for a sweep of the market. Use this as a no-go zone and keep coming lower. For example, right? This is a perfect example. Box to box. Trades through it on a close, comes back inside it, and we go lower. That's exactly what I just said right here. This is what you want to see here. So I've given you this whole internal range liquidity hunt, gave you the turn, gave you the time and price, and then I gave you the run, box to box. Now I'm giving you the continuation to expect on here exactly what we just saw right here. Box to box, hits it, and closes below it. So you go, great. Test the no-go zone and run for the low. That's model 3. Boom. Hits model 3. Model 4 now is continuation. You want to see this close below this candle. Next 2 seconds. There. Come back, tag it. You want to see that go short there. All the way up into here. So you got 1, 2, 3, 4, 5, and 6. You don't want to see any more pump through back through that 830 candle. Ideally, the midpoint is where you want to see that stop and come back lower. If this is really aggressive, you want to see it come lower. We've hit that no-go zone, so you want to really see it leave here now. That's good. I'm just going to move to that midpoint because I don't want to see the midpoint get taken again. So that's my fail safe. If it takes me out, it takes me out. Pay yourself at the low. That's the very next low. And I'm looking for, my target is right here. Another $1,000. You should really be above this, but I don't want to be, I don't want to see that get taken. Now see how we're in the squabblers now? The 910, that's a 10 high. So I want to see that 10 act like a high. If not, then 12 is going to be the high and we're going to be up in here. I want to see 9, 10, 11, 12 start coming back down here. So I want that 10 to hold now. There's 12. So you got to move to break even now. That doesn't cost us anything. We've broken that low, so you got to go to break even. Now all I want to see is this push right through to this discount box. There's a little tiny one right down in here. I want to say, yes, yes, come on. Give me the squeeze. I'm going to make sure I walk away with some cash there. There's that midnight open again. You could use that as your target. I like to see if we can get, just come down and give that little kiss. And I'm going to make sure I take it out on that spot too. Because sometimes the candle gets right down and tags it and the spread keeps you out. See how that Tibbs held the price that we're looking for? This is the 12 though. So 14 can give us a little pop up in here. Give me an institutional order flow on 14. Like that. Give that a little kiss and then send it lower. No, don't take me out. Don't fill it in. Oh, you got me. So that's the 12, 14. So now this becomes the turn point, right? We come back to the breaker. That's why you always make sure you're covered, man. All this kind of crap turns on you. Tibbs right at a 12, right off that midnight open. I was trying to get this last little sucker. I bet you'll still get it. There's a retest of this. Now I want to see this close below here, come back into this. Come on down. If it starts pushing back through here again, then I'm looking for this for a run higher again, for a box-to-box run. So I want to see it come back through there. I want to see that little sucker get hit right here. So higher or lower? We still haven't broke this high, so it's still going lower. We have not broken that with a body, and we just got some wicks back into this candle, which is okay. I just don't want to see this go here, because otherwise we have to break above here, use this as support to come back into that no-go zone again. And then if we get through the no-go zone, we're into P1, 2, and 3. So premium 1, premium 2, premium 3. See that right to the very bottom of it? No body above now. Wait 19 seconds. We're hitting the mean threshold of this candle now. See how we're through that? Now watch this. 8:19. 5 seconds. Change direction again. Do we continue pushing higher now? Look, check your higher time frames. So we've come down to old candle. Push back through. We're in the mean threshold of the last up close candle here. It's mean threshold. There's the body traded above here. That's supposed to be a buy here now. Now I want to see that. As soon as it takes that little high out, I'll go to break even. Right there. So now you want to see that just keep coming up higher. This is a model 2 internal range liquidity hunt. So now you're doing a model 2 hunt for 50%. We'll just do a 50% run. Oops. 50% run. So we don't want to see it come down again. So we're guaranteed money. We're aiming for 50% of that range, which will put us back in that no-go zone again. Well, we're already in the no-go zone. So if it tags me, at least I made 90 bucks. If I'm on the wrong side of it, we just tag this and send it lower. So all the time this is holding, that should still go higher. That's got to hold. So ideally you want to say that I don't want to see this wick here get broken. 50% of it, good. Keep going higher. I'm going to still say that's going higher. Stop loss will go at the bottom of the wick. Nope. We're eating through here already, so we're coming back through here. As soon as you go through that midpoint, look for this area here. You just paid for some new information. Wait for this to break here on the downside now. We've already worked it, so I didn't want to see it come through there. So now look for this as a no-go zone. As soon as you see that close, 22 seconds, look for this to continue going lower. Came back into that no-go zone we're looking at. Didn't quite hit the 50%, but hit the no-go zone again. And took out our bull trap right through our discount box. And look at this wick forming here. That's why I hate lunch hour. That's going to be it for me. Where do we finish up for the day? Pretty much break even. Look at that wick doing some damage right back through those areas that we wanted to see, find some sensitivity. Look at the bodies respecting it still. Wick did all that damage. And it was right on a 19 candle to 16, 17. Those guys like to make the high. 18 turns on 17. 19 is supposed to turn on 18. So if it continues going lower, then I'd expect to see 2021 come down lower now. I'll be right back. Shopping around. This is lunch hour now, so I think that's going to be it for me, you guys. I hope you got to learn something today. I hope you got to see that this is an algorithm. There is some amazing accuracy if you know what it is you're looking for. And watch this next price leg lower now. I don't know what this is down here, so we'll use it up here. Look for this one down here. Yeah, I hope you got something out of it today. I do appreciate you guys turning up. So bottom of this, we'll finish that leg off now. Pay yourself at the low. Look for that little area we're looking for right here. Hit it. See how the bodies stop on it? Could have randomly stopped anywhere inside here. Why inside there? Stopped, opened, hit it, and went lower. Took out the low. Now I want to see if this holds price here and extends it lower. After taking that low or closes above it, taps it again, and then starts heading for the next bull trap. Okay, so as usual, I'm sending the love, you guys. I appreciate you guys, your time, and I will see you guys live tomorrow. Enjoy the football. Canada's playing this afternoon, so tune in, check it out. I can't wait to see how we do, and I will see you guys tomorrow. Hasta la vista. Thank you so much. Waving goodbye. Bye, 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 bye. Thumbs up, like, subscribe if you're new to our channel. We're here every day for you. So, see how we traded above it right here? Closed above. That breaks that little tiny no-go zone to the upside. Send it up higher. Wait for that to break. Take out the bull trap. Run for another higher. Run for this high and run for that premium above you. That makes sense. If that rolls over and comes back down below that again, then we're starting to target down here further. I'll see you guys tomorrow.